This is our Forex blog for September 16th, 2014. I haven't really done a blog for a while because I'm focused on trading and focused on improving our trading signals. There's almost 800 different patterns in our software right now under our Forex signals. And really the key to any kind of trading is having small losses and bigger wins. So this is what your risk is on this trade. This is how much you generated. This is what the risk is, and that's what we lost in that trade. Then we got long here and got the loss back plus some, as you can see. And then we went short again and made a little bit. Short again here, and we didn't really make or lose money. It kind of broke even, maybe lost 2 or 3 pips. Shorted right here. It made money. And again, on this trade here that really didn't even pan out, the stop quickly moves past break even, and you make a few pips versus losing. And that's the key to trading. Small losses, big wins. I am making all of my new signals just incredibly designed for incredible accuracy. You can see going back yesterday, huge win, small win, loss here, huge win, tiny win, decent win. I mean, we got long right here at 23, or I'm sorry, 61, and got out at 77. So that's still a 15 pip win right there, and also nailed the high. And a lot of our tools are designed to see when the selling pressure is over, and if the market's up statistically too much, we're looking to sell. And that's how I'm able to consistently find the lows and the highs frequently. Here's the yen today. Small loss, got those 2 losses back, and then had a nice win there. And again, it didn't move that much. And here's the dollar CAD. Pretty much break even, big win, small win, and we're still in that last trade. So that's our Forex signals today. If you want to manually trade, you can use our signals in combination with your own methodologies, and using our currency indexes, you pretty much know which currencies are likely to go up and down. For instance, you can see the dollar started the day off. It was in a downtrend coming into today and broke out above the hourly. It tends to go up when that happens. You can see the weekly and monthly trend is up, and you would want to sell that versus a currency, or I'm sorry, buy that versus a currency that's weak, like the pound. So earlier in the day, you're looking for pound dollar sells because the pound's weak, the dollar's strong, and you can look at any time frame chart, but you can see here this was going down. It rallied up to its previous high right here. It couldn't get above it. And anywhere in that time area, or even down here, you can look for sells. Our signal found a sell right here, pretty close to where a manual trader would have very likely got into this little double top right here. It might have been too strong at the time to sell it here, and that's why we check most of our trades to make sure it's not too strong to sell or too weak to be buying the bottoms, which is probably why we didn't buy this little 1, 2, 3 pattern right here. Some patterns are very hard to get a computer to spot that a human can see. Let's scroll forward here. You can see the Australian, extremely weak weekly and monthly trend. The Swiss is trending up, and the weekly trend's up slightly. The monthly trend is slightly down. You could look for sells in the Australian Swiss today. It's very, very likely earlier in the day to be going down. That's exactly what happened. You can see, started the day off, went down. You know, you got a little bit of a pullback right here, and once that trend line got broken at 6:30, it's very likely that the Swiss was no longer strong. You can see it's at the statistical likely reversal area. It's still potentially going to find support and go up until it breaks the hourly. After 11:30 or so, it's pretty much confirmed to be in a downtrend. You can see the Australian switched trend direction. It was down, went above its hourly. This one's underneath its hourly. And if you look at the Australian Swiss chart, you can see the trend was up, and it was kind of going sideways for multiple hours with a slight upward angle, and then it broke out. And you can take these trades anytime you see a narrow range pattern like this, multi-hour narrow range pattern. You can get into a trade with a small risk, and you already know your profit targets, Fibonacci profit targets. Your first one, second one, and you can see this one kind of stalled here and then went up a little bit later. But if you got this much profit out of it, your risk was this amount, you made 1.5 to 2 times more profit than what your risk is. And that's the key to trading. And let me just showcase why we use range charts. I'll just bring up a 5 pips per bar range chart, and you just see much more on the chart. Here is the little range, and when it broke out, you might have just put your stop underneath the previous bar versus the low, and it quickly went up. You move your stop to break even within 1 bar, and it just took off. And you also kind of hang on, and when it gets to one of these fib targets, you can just put your stop 1 pip underneath the bar's low. It's only 5 pips, and you have a very tight stop, and it goes up a little bit more, and you can see it runs out of steam, and you might have made 5 to 10 more pips on that versus just getting out at the fib target.